So, Ally Financial just dropped a massive earnings report, and I mean massive. Profits absolutely exploded. But behind those big headline numbers, there's always a story. So in this explainer, we're going to break it all down and figure out what's really driving their success. All right, let's dive in.
When you first look at one of these things, it can just feel like a wall of numbers, right? But I promise you, hidden behind all that data, there's a story. And today, we're going to find the simple, powerful story that Ally's numbers are telling us.
So, that's the CEO, Michael Rhodes, setting the stage. And listen to the words he's using: progress, improved returns, disciplined execution. It's a really confident tone, right? But the real question is, do the numbers actually back that up? Let's find out.
All right, let's get right to it. How did Ally actually do? Let's start with the big headline numbers, the report card for the quarter, if you will.
Okay, first up, the number everyone looks for, adjusted earnings per share, or EPS. They hit $1.15. Now, all that really means is for every single share of their stock out there, this is the core profit they made. And that word adjusted, it just means they've cleaned up the numbers a bit, taken out some one-time stuff to give us a clearer look at how the actual business is doing.
But see, $1.15 by itself doesn't mean much. The real story, the real kicker, is how that compares to last year. And get this, it's a 166% jump. I mean, that's not just growth. That's a flat-out explosion in how much money they're making.
And this wasn't some small operation either. This profit was built on a massive foundation of revenue. We're talking $2.2 billion for the quarter. Just think about that scale for a second.
And look, this wasn't just a fluke, not some one-hit wonder of a quarter. If you look at the trend over the past year, you can see it plain as day. Both revenue and those profits have been on a steady climb. This is what you call real, sustained momentum.
So, a 166% jump in profits, that doesn't just happen by accident. So what's behind it? Where did these incredible results actually come from? Let's peel back the onion a little and look under the hood.
And it really all starts here. The absolute heart of Ally's success, the thing that's really driving these incredible numbers, is their huge auto finance business.
Yeah, thinking of it as an engine is the perfect way to picture it. This one division is the powerhouse that drives the whole company forward. And this quarter, man, that engine was firing on all cylinders.
So, just how hot was that engine running? Check this out. In just 3 months, they processed a staggering 4 million applications for auto loans. That is an all-time record, and it tells you everything you need to know about the demand out there.
And here's where all that demand turns into actual money. Those 4 million applications, they directly led to over $11 billion in new auto loans just this quarter. So these weren't just people kicking tires. Ally did an incredible job of converting that interest into real business.
But here's the really impressive part. It's not just about lending out a ton of money. It's about lending it out smartly. The average return, or yield, on these new loans was a really healthy 9.72%. And get this, almost half of those loans went to people with the best credit scores. So they got huge volume, but they did it while keeping both profitability and quality super high. That's the trick.
Okay, so the engine is obviously incredibly powerful, but that begs the question, right? Where does a company even get $11 billion to lend out every 3 months? An engine this big, it's going to need a seriously deep fuel tank. And that fuel, well, it comes from the other side of the company, the quieter but just as important half, Ally Bank. We're talking about the largest all-digital bank in the country.
So if we stick with our analogy, this is really the core of their whole business model. You've got the auto lending, which is the powerful engine, and then you have the digital bank, which is the deep, steady fuel tank. All those customer deposits, that's the stable, relatively cheap funding that makes the whole thing go.
And believe me, that fuel tank is deep, and it's steady. You can see right here how their deposits from regular customers have just built this massive, reliable foundation that's grown year after year. This isn't flighty, speculative money. It's a total bedrock.
Just how big are we talking? $142 billion. That's how much money they have in deposits from their 3.4 million customers. It's just an enormous, stable pool of capital to draw from.
Now, here's a key detail that makes that money so incredibly stable. A phone, 92% of it is FDIC insured, that government guarantee. That gives customers huge peace of mind, which makes them way less likely to pull their money out. And for the bank, that means their funding source is super, super reliable.
And this is it. This is how the two halves of the business fit together perfectly to create this powerful cycle. The stable, trusted digital bank brings in billions in low-cost deposits. That money then gets pumped into their high-profit auto lending engine. It's a fantastic loop where each side makes the other one stronger.
Okay, so we've seen the incredible results, and we've seen the two core parts of the business that made it all happen. So let's wrap this up by looking at the big picture strategy and what might be coming down the road.
And there's that word again, momentum. The CEO is really hammering this point home. His message is clear. This wasn't just a lucky quarter. They believe this is a real, sustainable trend that's being built on just executing their strategy really, really well.
So let's just boil this whole thing down. What are the key takeaways? First, just record-breaking performance. Profit soared, and it was all driven by that powerhouse auto finance engine. Second, it's all built on a super stable foundation, that massive digital bank providing the cheap fuel. And third, it's about disciplined execution. They have a focused strategy that connects these two parts, and it's clearly turning into some amazing results.
So look, Ali has absolutely proven their momentum is real. Their strategy is clicking. But in this economy, with interest rates always shifting and questions about the consumer, the big question is, can they keep it going? Can they keep this engine running at full throttle? That is what everyone's going to be watching for next quarter.